the way I got started in the stock market was two reasons. One, I
Hey, Tony, sorry. You might want to take out your email addresses there. I don't know if you can make that screen smaller. I don't know if you want everybody to see your email addresses there on the side of your screen. I'll give you back the mic, sorry.
don't know how to do that, Frank.
You're like me technically then. We're good at trading, we're not good technically. I think you can move your screen or just click the X at the contacts there. So you can close your contacts list. Right where it says contacts.
Whoops. What, exit out on top there?
Click on X right next to contacts. Or I guess, okay, go ahead. Do what you want to do.
Or right here. Okay, I'm not very good on those technicals. I might know how to chart, but I don't know the technicals very well. So the stockbroker told me that I want to invest some money. And I asked him, I said, I want to learn the stock market. He said, you'll never learn it. Well, when someone tells me I can't do something, that's a big mistake. So in the meantime, a friend of mine I hadn't seen in a long time, I happened to see him, and I asked him what he was doing. He said, well, I'm trading stocks. He says, as a matter of fact, I've been investing in this little penny stock, 1 to 5 cents, and it went up and up and up. I had 140,000 shares, and it went to $1.25, and I ended up making over $100,000. Well, that got me interested too. You know, it'd probably get anyone interested. But in the interim, he lost all that money because he didn't know how to trade and he was listening to a broker. If you cannot, no one knows your money like you do. So if you cannot take action yourself and learn the market, it's very risky going with a broker. Except like back in the 90s where even a 2-year-old could point at a stock and, you know, that stock was going to go up. So I was in a small group of about 8 people, and there was a guy named Elliot Uden friend in there. And he was always saying that he wanted to learn how to day trade. Well, I had seen Frank's day trading, and I said, well, why don't you go join up with Frank? You could probably do some good and learn some day trading. So he went and joined up with Frank, and he told me later, he said, I'm up $50,000 on my account. And then he says, you got to come in and join this group. I said, I don't want to belong to a big group like that. And then he says, yes, you do. So finally I came in and I joined Frank's group. Well, it was a great, you know, group. And I learned some things in there. And I was doing weekly and monthly charts, and they were charts that a lot of people in there weren't used to seeing. So Frank, one day, he told me, he says, you know, I see what you mean on those long-term charts. And then, you know, 2 or 3 months went by, and he says, you know, I think you're capable. Would you like to teach my people how to swing trade? He said, I just don't have the time to do it. And I said, sure. And that's how I cut my teeth teaching people. I've taught about 75 people personally, one-on-one, you know, over the years. And oh, excuse me, a lot of them have gone on to become very, very proficient traders. So what I teach is very basic. I teach candles, oscillators, indicators, moving averages, how they complement each other. Very simple. And I like to keep my charts like Frank. I keep them as simple as possible. You'd be surprised what some people have on their charts. It's a conglomerate of lines going in all directions. I don't know how they read them. I couldn't read it myself, but then again, you know, I'm not a techie guy. So if you learn the basics, and then what I expect people to do is take it to the next step, you know. So that was about 5 years ago. I went full-time trading. I had a very good business, and I had to weigh how much I was making net in my business, working like a dog. I was a carpet contractor. As compared to sitting on my fat butt during the day and making the same amount of money with no overhead, except for a few shekels going out for my, uh, computer and the charting programs. So, and I loved it. It was a passion with me. I love learning. I had a hard time learning at first because of retention. You go so long and all you're reading is the newspaper and or watching TV news or something like that. And then when it comes down to buckling down and having to study, retention can be very difficult for some people, and I was one of those people. But I was persistent and I forged on, and the retention got easier and easier and easier. And then it became second hat with me. And I just made a commitment when I went full time that I was going to become a trader. And that was it, period, stop. So from there, we can move on. So here's what I look at charts. And this is very true. Charts do not foretell the future market behaviors or predict market prices. They offer a concise and accurate history of price movements of a particular market. In that history lies a trend, and it's from this trend that you can extrapolate data on which to base your future projections of probable market behaviors and price changes. The greatest value is that you will get is when it comes to using charts. The easiest way to use charts is using a trend line. Like Frank uses Bollinger Bands. They're just trend lines. They just squiggle a little bit. That's all. So you could take and draw a cross on a piece of paper, like a doji, and then you could do the horizontal lines both ways on it, and you have 6 lines, and that's your trend lines. They can go in all those directions like that. The easiest way to do the charts is using trend lines. Indicators are another way to determine the direction of the market. But if you learn how to identify trend using a simple trend line, then you will never have to worry about indicators again. I have proved this many, many times that you don't need all that other stuff on a chart, especially if you use candles. Then indicators and oscillators would best be used as diversions, to look for diversions. This is extremely correct and overbought, oversold. So based on that, and keep an open mind to this right here, because this may be a little different than what you are used to, we'll proceed. Now, usually when I teach trading to people, I have a set format that I use. But being that this was kind of in a hurry, and the format that I use for teaching people is based on my conversations with them. I try to get down to their level of education and where they're coming from, kind of get on the same ground as them. I'm not going to stand up on a desk, and teach someone or even a group of people, which I have done. I like to sit down right next to them and in handshake different, that close, and get down on their level, get down to the nitty gritty, So we're just going to go through some charts here, and I'm going to show you what I look for on charts. I'll go as rapidly as I can. I use stock charts for all my charting. This is very simple. We have this gap right here. We have this downtrend. We have this downtrend here. We have this nice bottom that it put in here. Now, at 18 cents, when it hit this bottom, if it was going to go under, it would have gone under from there. So on a monthly chart, a lot of times I will look at a monthly first because I want to see what the worst scenario is on a chart. And that monthly tells me so much. Like here's the daily right here. 1, 2, 3 candles if you're using a 3-month daily. Or if you're using a 6-month daily, we go 1, 2, 3, 4, 5, 6. So these for 6 months, or the daily chart, and then we go to the weekly chart like this, and then of course the monthly chart. So on this chart, these are the moving averages are 3, 5, 8, and 34. Now I have found in any time frame when the 8 EMA 8 crosses the EMA 34, you got a winner. That's simple. I have found in any time frame when the price moves above the EMA 8, you have a winner. And that's a very simple way to trade. If you only had an 8, you could buy when the price moves above the 8, and you sell when the price moves below the 8. Other than that, you're looking for trend. See what a beautiful trend on that. And that's the trend is using the EMA 8 as support. Now, I get new people all the time. You know, I have a trading room. I'm not going to tell you what it is, but I do classes every week and on Sunday nights, and we go through scans during the week, and they say, well, it's easy for you to say that. And I says, you're absolutely right. It is easy for me. The reason it is easy because I spent years studying and I never gave up. Perseverance. And you can do it too. And I'm a firm believer that unless you have a mental wart between your ears, you can do it too. Anyone can do it. But there's rules that you have to follow. There's a lot of education that comes into play. And you don't want to trade just to trade. You want to have a reason to trade a stock. So here we look at this, and here I'm looking at 1997, I guess. Yep, 1990. Look at this long, long downtrend on this. Well, this is the high, this is a lower high, another lower high. The big break on this stock is going to be $4. That's going to be the monthly trend break. But the major break is going to be when this price comes up here and takes out this lower high and makes a higher low. And that's when we know we're on our way on this stock. This could just come up to the trend line and bounce off, make another lower high, and come on down. But it did break out of a little flat top triangle here, and the 8 is getting pretty close to crossing that 34 on this chart. So you would scroll down to look at the weekly. The reason I start on this monthly is that this gives me the whole picture. I'm looking for price patterns. And price patterns, are very repetitious. And then the second thing I'm looking for is what happens within those price patterns. And of course, on this chart, this is what I like. Broke out of that little flat top. See the increasing volume? Everything is related to volume. Price, volume, support, resistance. Those are the only 4 things that you need to be aware of on a chart. Okay, let's move on. Now, most of these little stocks are inexpensive stocks, and there's a reason for that. Nice downtrend, downtrend, downtrend. Nice cup here. If you look at a line chart, a cup and handle shows up much better than it does on a candle chart. But this is still, pretty much a cup right here. And here's the downtrend right here, or the handle. Okay, this looks really nice. Let's see how the EMA 8 came down, bounced right off of that 34, and we came up and we broke through the $2. We made a high rejection of price with that wick, and then the price came down. This $2 should hold right here. We should get another move up on this. And you notice when it was down here, see how low the volume gets? You have to relate everything to that volume. The volume's nice and low. That tells us in this price range right here, low volume accumulation going on. So I'm an old advocate of the old timers that traded